You know, trading has a way of revealing more about a person's inner world than any mirror ever could. I've always said the market doesn't care what you think or feel. It simply reflects your state of mind back to you. The market is never wrong. It just is. But the way we interact with it exposes every illusion, every bias, every emotional attachment we carry. When I look at what destroys traders, whether they're brand new or seasoned veterans, it always comes down to two things: greed and emotional bleeding. If you don't learn to master these, the market will do it for you, and its lessons are always paid for in capital and confidence. Tell me, have you ever been in a trade that was doing exactly what you wanted? You were in flow, aligned with the move, and then instead of locking in the profit, you thought, maybe just a little more. Maybe this time it'll run forever. That's when the illusion of control takes over. The market shifts, momentum fades, and before you know it, the winner you were proud of turns into a loser that stings. That's not bad luck. That's greed. I've never seen a trader fail by consistently taking profits according to plan. But I've seen many destroy themselves by refusing to follow through when their plan told them to act. They wait, hoping the profit grows into a windfall, all while ignoring the reality that the market had already shown its hand. You have to understand, the market doesn't owe you anything. It doesn't respond to your hope or reward your desire. It rewards alignment with reality. It pays those who act with clarity, consistency, and trust in their process. Can you step aside when your system signals that the opportunity is over? That's not weakness, it's strength. It's psychological discipline, the rarest edge in trading. And here's the thing about what I call emotional bleeding. Every trader who survives long enough learns this truth. You can't hold on to losses and expect to grow. When a trade goes against you and you sit there hoping it'll turn around, you're no longer trading. You're negotiating with reality. And reality always wins. You've seen it. The public buys a stock, it drops, and they say, it's temporary, I'll hold. It drops more. It's cheaper now, I'll buy more. Soon they're trapped in a losing position that isn't even a trade anymore. It's a hope. The bleeding grows worse, the clarity fades, and the trader stops thinking in probabilities. Why let that happen? When you cut a loss quickly, you stay mentally free. When you hesitate, when you cling to the illusion that you can't be wrong, that's when the market takes everything. The first loss is the best loss, because it preserves your mental capital, the true currency of trading. Have you ever looked back and realized that a single hesitation, a single refusal to take that first small loss, cost you months of progress? That's the tuition most traders pay before they learn that success isn't about being right. It's about being consistent. The big money doesn't come from constant action. It comes from patience and precision, from aligning yourself with high-probability moments and then letting them unfold. But greed gets in the way, doesn't it? It whispers, just one more tick, one more point. That's how a good trade becomes a bad one. The market doesn't announce when a move is done. It just stops, silently. And if you're driven by the need to win more instead of to trade well, you'll always notice it too late. The chart doesn't lie. It's a neutral reflection of collective behavior. When price breaks structure on strong participation, that's the market communicating. When it loses momentum, when lower highs form, that's another message. The question is, do you listen or do you argue? Most traders argue. They impose their beliefs on the market instead of interpreting what's actually there. They say, it can't go lower, it's already dropped too much. That's not analysis, that's denial. And denial bleeds accounts dry. Think of your trading capital as your energy, your ability to express opportunity. Every dollar lost through emotional error reduces your potential to act when real opportunity appears. When you're mentally and financially drained from trying to recover rather than respond, you miss the setups that truly matter. Greed makes traders chase. Chase tips, chase rumors, chase momentum that's already passed. It makes them buy when patience is required, hold when letting go is the right call. Greed whispers, "This one will make you rich." But the truth is, in this business, you don't get rich quick. You get broke quick. Do you remember the last time you chased a stock that was already gone? You thought you were catching a rocket, but it was already falling back to Earth. That's what emotional attachment does. It replaces logic with fantasy. Never average down. Never add to a losing position. That's not discipline. It's desperation disguised as confidence. When a trade goes against you, that's information. The market is giving feedback. Accept it. The professionals do not trade to be right. They trade to identify and manage probabilities. Here's the real secret. Most traders don't want to hear. Wealth in trading doesn't come from being right. It comes from staying available, staying psychologically balanced, preserving your capital and your clarity. The more you protect your ability to act on high-quality opportunities, the more consistently you grow. The problem is that noise feels like progress. Activity feels like purpose. Greed thrives on that illusion. It convinces you that if you're not always in a trade, you're missing out. But in reality, the best trades come from long stretches of observation. Can you sit on your hands while the crowd chases shadows? Or does the need for constant engagement drain your account and your focus? I've seen brilliant minds fail not from lack of intelligence, but from lack of emotional control. A trader can read charts perfectly and still implode because they can't master their impulses. Trading isn't a battle with the market. It's a battle with yourself. Greed blinds. Losses wound the ego, and desperation, the most dangerous state, emerges quietly after a string of pain. Notice how your perception shifts after a bad trade. Suddenly you start seeing setups that aren't really there. You start forcing trades to regain control. That's not strategy. That's survival mode. That's bleeding through the mind. Look back at your losing trades. How many were caused by ignoring your rules, by choosing hope over probability? The chart is objective. It only reflects truth. But our emotions distort it, make us see what we want instead of what is. The chart says it's breaking down, and you say it has to bounce. Which one do you think is right? When you truly control greed and fear, the market starts to look different. You stop chasing. You stop forcing. You start waiting for the market to come to you. And that waiting, that calm neutrality, is the real edge. But here's the paradox. Discipline feels like doing nothing. And most traders can't handle doing nothing. That's why they fail. Can you sit still when the probabilities aren't in your favor? That's the essence of trading mastery. Trading is simple, but not easy. The rules are clear. Cut losses, let winners run, follow your plan, respect the tape. But the difficulty lies in doing what's simple when your emotions demand the opposite. The market is just a mirror reflecting your ability to stay aligned with your own rules. Greed and loss are not external forces, they're internal choices. Every dollar you save by cutting losses is another opportunity preserved for when the real trend comes. Every trade you skip out of discipline is one less self-inflicted wound. The trader who endures isn't the one who catches every move. It's the one who avoids self-destruction. That's the real secret. Trading isn't about making money, it's about keeping it. Think of how much further ahead you'd be if you had simply protected what you once earned. Desperation doesn't announce itself. It creeps in quietly, especially after a series of emotional hits. You think you're the same trader, but you're not. Your perception shifts, your focus narrows, and suddenly what once looked uncertain now seems appealing. That's not opportunity. It's distortion. Why? Because you're desperate to regain control. That desperation doesn't make you more disciplined. It makes you impulsive. It makes you act when you should be observing. It pushes you to force trades, to try to make something happen. And forced trades almost always end the same way, with more losses. Have you ever caught yourself clicking buy or sell, not because the setup aligned with your system, but because you just couldn't stand the discomfort of doing nothing after a losing day? That's not intuition. That's emotional residue. It whispers, one more trade and I'll get it all back. But the market doesn't know what you lost yesterday. It doesn't remember your pain, and it won't compensate you for it. It simply presents a new set of probabilities today. If you act from frustration instead of clarity, the market will do what it always does. It will expose that lack of alignment. When a trader is desperate, he's no longer trading within his edge. He's fighting to soothe an emotional wound. His plan feels too slow, too cautious, too boring to satisfy his need to fix the pain. So he forces it. He doubles his size. He jumps in early. He ignores his stops, telling himself, this one has to work. And in that moment, he knows it's not discipline. It's hope disguised as strategy. But hope has no place in a probabilistic game. Traders who operate on hope don't last long because they're trading emotions, not edges. Have you ever watched yourself break every rule you built while justifying each one in the moment? That's not lack of knowledge, it's lack of emotional control. That's the face of desperation in trading. Let's be honest about what fuels this state of mind. It's not just about money. It's about identity. Losses bruise the ego. They challenge your belief in who you think you are as a trader. You start to take the market personally, as if it's mocking you. You tell yourself you can't end the day in defeat. So you start trading not to make money, but to reclaim your sense of worth. And that's the most expensive kind of trading there is. The market has no memory. Only you do. And that memory, the emotional charge of recent pain, distorts your perception. It makes you see opportunities where there are none, and danger where there isn't any. That's how account bleeding accelerates. Not through one catastrophic mistake, but through a string of emotionally charged decisions. Think back to the times you dug yourself into a hole. Weren't they almost always after you tried to fix a loss with another impulsive trade? Each time you told yourself, just one more and I'll be even. But instead of even, you went deeper. The hole widened because you weren't responding to the market. You were reacting to your own discomfort. Desperation isn't strategy. It's emotion, and emotion has no statistical edge. The market doesn't care about your need to recover. It rewards clarity and discipline, and desperation robs you of both. What makes it so dangerous is how subtly it spreads. It starts with one small compromise. Maybe you move your stop just this once. But when the trade keeps going against you, you rationalize, it'll turn soon. I can't take the loss here. Before long, you're sitting in a position you never should have taken. At a size you never should have used, holding a loss you can't emotionally accept. That's how traders blow up, not through one massive error, but through a slow erosion of boundaries caused by internal pressure. Have you noticed how easy it is to compromise when you're emotionally off balance? And don't think desperation only follows losses. It follows missed opportunity, too. A stock breaks out without you, and you hesitate. It runs higher. You feel left behind. You tell yourself, I can't miss the next one. Then you jump into the next setup without confirmation. Not because it's high probability, but because you can't bear feeling left out again. That's not trading. That's chasing emotional relief. The trade fails, and now you've created a loss that didn't need to exist. Missing a trade costs nothing. Chasing out of desperation costs everything. Understand this. In the market, patience is punished far less than impulsiveness. Waiting feels uncomfortable, but it preserves your resources, mental and financial. Acting from desperation depletes both. When you've bled enough, you stop thinking like a trader altogether and start behaving like a gambler, spinning the wheel just to feel in control again. And the market feeds on that mindset every single day. The hardest truth to accept is that desperation is self-created. The market doesn't force your hand. The chart doesn't beg for your trade. You choose to act. And because you choose, you also have the power to stop. That's not weakness, that's mastery. The ability to pause after emotional disruption is the difference between professionals and amateurs. Do you ever give yourself permission to step back after a bad loss? Or do you keep throwing yourself into the fire, trying to undo the past? The best traders aren't the ones with the fanciest indicators. They're the ones who can recognize when their state of mind has shifted and step away. They know that clarity is capital. When they feel emotional tension rising, they don't push through it. They reset. They walk away, breathe, recalibrate, and only return when they can see probabilities, not emotions. That's why they survive. That's why they thrive. Desperation is like quicksand. The harder you fight it, the deeper you sink. The only escape is stillness. You stop struggling. You stop trying to make the market give back what it took. You surrender the illusion of control and trust the process again. That's not giving up. It's regaining composure. But most traders can't do it because doing nothing feels unbearable. They confuse patience with weakness, and so they self-destruct through overaction. The truth is simple. The market will be here tomorrow. There will always be another setup, another cycle, another opportunity. But you might not be if you destroy yourself today trying to force one. Protecting your capital also means protecting your mental state. When your mind is clear, you can see the market as it is. When you're desperate, you only see what you need it to be. And that's the most dangerous blindness there is. Do you know what separates a temporary setback from permanent failure? It's whether or not you let desperation dictate your next move. Every trader takes losses, that's a constant. But not every trader turns those losses into emotional spirals. Those who do bleed out slowly. Those who don't live to trade another day. Greed and desperation have ruined more traders than ignorance ever could. A trader can read the market flawlessly, execute a perfect entry, and still lose everything if he can't manage his internal dialogue. You know what I mean? You've been in that trade that's going your way, profit sitting right in front of you. You could take it, lock it in, and call it a disciplined win, but something whispers, wait, you can get more. That whisper is greed. It's as seductive as it is destructive. The market offers opportunities, not promises. When you have an open profit, it's only yours when you take it. Otherwise, it's just temporary potential. Numbers on a screen that can vanish the moment sentiment shifts. How many times have you watched a winning position collapse because you didn't act when your rules told you to? How many times have you thought, just a little higher, only to watch the trend reverse and erase it all? That's the emotional tax greed collects, and it's often far higher than the profit you were chasing. Greed blinds you to subtle feedback. Volume fades, momentum weakens, reversal patterns appear, but greed silences all those signals. It whispers, "This time is different. The move isn't done." It convinces you to override your process and rationalize disobedience. But the moment you silence your plan, the market takes back control. Think about it. Every time you ignore your system for just a little more, it ends the same way. The truth most traders avoid is that big moves don't happen every day, and they don't last forever. Every cycle ends. Your job isn't to milk every tick. It's to extract what your process allows, then step aside before the odds shift. Greed convinces you the end is farther away than it really is. It whispers that selling now means you're leaving money on the table. That whisper makes you hold past your edge until your profit evaporates. A professional trader isn't defined by his biggest win. He's defined by how much of it he keeps. The difference between a successful trade and a failure often comes down to timing, not direction. You can be right about everything, entry, trend, analysis, but if you don't exit when your signals say so, you might as well have been wrong from the start. The market pays for alignment, not ego. Greed is the great enemy of timing. Do you remember the last time you were right about everything except when to sell? That's greed's fingerprint. There's nothing wrong with holding a position when the probabilities still support it. That's discipline. But when you hold after the evidence changes, when you refuse to take what the market is offering because you want more than it's willing to give, that's not discipline. That's attachment. And attachment in this business is the silent killer. I've seen traders turn a solid 10-point profit into a 10-point loss, all because they couldn't handle the discomfort of leaving money on the table. But leaving money on the table is never as costly as losing what you already had in your grasp. Do you really believe that yet? Or are you still chasing every last tick as if perfection were the goal? Greed also tricks you into rewriting your plan in the middle of the trade. You entered with clear logic, a defined target, a resistance level, a percentage that fits your method. The market reaches that level, but instead of exiting, you say, "It looks strong. I'll hold a bit longer." That's not confidence. That's emotional impulse disguised as logic. The instant you abandon your plan, you're no longer trading your edge. You're trading your feelings. And feelings have no consistent probability. The market can't be fooled by justification. It rewards discipline, not impulse. And discipline means following through on what you said you'd do before the trade began, not what you feel like doing in the moment. How many times have you broken your own rules out of greed, only to sit there afterward wishing you hadn't? Here's the paradox. Greed doesn't just take your money, it takes your peace of mind. When you're attached to wanting more, you stop enjoying what you've already done well. You become restless, obsessed with what you could have made if you'd just held longer or added more size. That restlessness corrodes clarity. Even your wins feel small, hollow, unsatisfying, because greed constantly raises your expectations beyond reason. So you take bigger risks, stretch your trades further, and eventually the market restores balance the hard way. That cycle repeats, gain, overconfidence, loss, until you either learn emotional control or the game teaches it to you permanently. Think about how many great fortunes were lost, not because of bad analysis, but because of bad exits. Buying is easy. Any beginner can buy. Selling requires awareness, patience, and most importantly, humility. Selling means admitting the move is done. It means recognizing that enough is enough, but greed can't accept that. Greed whispers that there is never enough, and the market punishes that belief every single time. Be honest. Have you ever grown your account through greed? Or has greed always ended with the market taking back more than it gave? Another danger of greed is how it blinds you to new opportunity. You cling to a trade that's already exhausted, squeezing it for one more uptick, while elsewhere a new clean setup is forming. But you can't see it. You're too emotionally tied to what's fading. By the time you let go, you've lost not just your profit, but also your next chance. That's the double cost of greed: lost gains and lost opportunities. A disciplined trader understands detachment. He releases the old to stay available for the new. A greedy trader clings and misses both. So ask yourself, do you want to be ready for the next real move, or stuck in a dead position because you couldn't let go? Greed also hides in small, subtle ways. Maybe you set a target and the stock reverses a few cents shy of it. You curse yourself for not taking it earlier. But why did you need the exact number? Because greed wanted perfection. It wasn't satisfied with an almost perfect outcome. It demanded all of it. And in chasing that illusion, you gave back far more than a few cents. Trading isn't about perfection. It's about consistency. Greed doesn't understand consistency. It only understands more. The wise trader learns that enough is victory. He takes profits according to plan, steps aside, and lets the next cycle unfold. He knows opportunities never end, but his capital will if he keeps pressing. Most traders only learn that lesson through loss because greed rarely dies after one mistake. It lingers, tempts, and tests you again and again. The question is, how much will it cost you before you learn to control it? Wealth in trading doesn't come from constant motion. That's the hardest truth for most to accept. Sitting in front of screens all day creates the illusion of progress. But activity without clarity is just noise, and noise without edge leads to losses. It's not the number of trades that builds wealth. It's the quality of the trades and the ability to keep the money once you have it. Do you really think the market cares how much effort you put in or how many buttons you press? It doesn't. It only rewards those who act when probability aligns and who protect what they've earned afterward. I've seen traders who couldn't sit still, who needed to chase every move, every flicker. They traded morning, noon, and night, and ended with nothing but frustration and a broker's bill. The commissions drained them, the constant stress wore them down, and whatever profits they grabbed vanished in the noise. Then I've seen others, quiet, deliberate, patient, who maybe traded a handful of times each month. But when they acted with precision and conviction. They struck hard, then preserved their winnings. Guess which ones built lasting wealth? Most traders think success means always being right. They think if they're not constantly proving their skill, they're failing. But trading isn't about being right. It's about staying functional, long enough to capitalize when conditions finally align. The big moves, the ones that can truly change your account, come rarely. And if you've exhausted yourself over trading low probability setups, you'll lack both capital and confidence when those rare moments appear. How many times have you missed the real move because you were busy fighting meaningless ones? Wealth in trading isn't about how much you make. It's about how much you keep. The market rewards the discipline, not the clever. A clever trader can call every twist and turn and still end broke. A disciplined trader may be wrong more often, but when he's right, he locks it in and defends it like treasure. He doesn't hand his profits back out of boredom or the need for action. He knows that while opportunities never stop, his ability to take them will. If he wastes his capital, or his composure? Do you view your profits as fragile resources to be protected, or as chips to throw back in? The worst bleeding isn't losing on a bad trade, it's giving back money you already earned. Nothing hurts more than watching hard-won profits dissolve because you couldn't sit still. That's why so many never build wealth. They're trapped in the cycle of earning and surrendering, always recycling the same dollars instead of compounding them. Imagine if you had simply kept half of every profit you ever made instead of chasing the next one. Where would your account be now? Wealth grows in stillness as much as in motion. Waiting, sitting in cash, protecting capital, these feel like wasted time to the impatient trader. But they are the foundation of readiness. The market doesn't reward the busiest. It rewards the most selective. The trader who can say no 9 times out of 10 and only strike when the odds are clear is the one who gets paid. Yet saying no feels uncomfortable. It feels like missing out. That discomfort is why most fail. They crave stimulation more than success. Do you want excitement or do you want results? Because in this business, you rarely get both. Protecting wealth also means resisting the urge to expand too quickly. Greed makes you accelerate just when caution is required. You string together a few good wins, feel invincible, and suddenly you double your size or triple your risk. Then the market corrects normally, and everything you built vanishes. That's not growth, that's gambling. The professional expands size slowly, in alignment with real progress, not ego. He protects the base before he builds upon it. How often have you seen someone win big only to lose it all because they couldn't slow down? Wealth in trading is as much about mindset as money. A gambler sees each profit as fuel for the next risk. A professional sees each profit as part of a structure, something to preserve, not consume. The difference isn't in the trades themselves, it's in the relationship to the outcome. Do you bank your profits and strengthen your foundation? Or do you recycle them into the next impulse? Look at those who've lasted decades in this business. They're not the loud ones chasing every rumor. They're the quiet ones content to wait. They don't measure their worth by constant activity. They understand that true wealth lies not in motion, but in control. They learn to tolerate boredom, to value stillness. And because of that, they were calm when chaos arrived. Can you sit in boredom without needing to act? Or does the silence push you into mistakes? The market punishes impatience. You chase minor moves to relieve tension. You bleed. Then when the real move appears, you're unprepared, emotionally and financially exhausted. Wealth isn't about finding the right stock. It's about being in the right state when opportunity arises. The state of your capital, your focus, your self-control, all of it matters. Desperation, greed, and overengagement strip those away. And without them, even the best setup won't save you. And don't forget, the temptation to cash out too early is also greed in disguise. Many traders treat the market like a paycheck, taking every small win without ever compounding. They never allow their account to grow because they chase immediate satisfaction. Real growth comes from retaining profits, reinvesting them strategically, and waiting for the moment that multiplies them. Greed can't see compounding. It only sees craving. Impatience eats tomorrow's fortune to satisfy today's emotion. So understand this. Wealth in trading isn't about endless wins. It's about building a reservoir of calm, clarity, and capital, and keeping it intact.